Good morning, traders. Todd here. Sorry for the late update here. That was note to self: don't do software update on your streaming software morning of a broadcast. That was really fun. So hope you guys are doing well. Happy earnings season. It is Wednesday, the 25th. We have pretty good breakout happening here in the markets. We have sort of the threat of a tech resurgence, growth. We're seeing some good movement in communications and semis. We're now in earnings season. Microsoft was out last night. Cloud numbers not as bad as they thought. Is the breakout real? So that is our mission today, should we choose to accept it. Good morning, guys. What's going on?
Hey Todd, how's it going?
Oh,
Alex?
I've had better mornings. How about you?
Yeah, fire drill at 5 a.m., dude.
This software usually is so dependable, but this update blew everything up.
Yeah,
Alex, give me a mic check.
1 2 1 2.
Oh, you sound good.
very good.
All right.
Accepting the mission.
Oh my God. Plus, I redid The Office. I just, one of those days, just woke up. You know, as you get to be, I think once you hit 40, you guys know it now, 40, I heard 45, the sleep starts to become very irregular. Plus, as an entrepreneur, pending breakout, a lot of things on the mind. So last night, 2 nights ago, 3:30, woke up and I was like, I tried to go back to sleep, wasn't happening. My office was a mess. So between 4 and 6:30, I completely changed everything, cleaned it up, did some cord management, make the space more functional. So I don't know. I'll give you guys a tour of the setup sometime. But I can't work when it's chaotic. I need to have a good flow. I like to have my market stuff here, and then I've got my so my business admin stuff back there. I'll give you a tour someday. Anyway, guys, what do you think about the markets here? What do you want to start off with? What's on the top of your minds this morning?
Well, we've had a pretty good run for the last 3 weeks in a row, and looks like it's continuing here in the growth trade, right? I mean, the growth is starting to push ahead of the value trade, and people, they're going to get caught unaware, right? So that's what we've been looking at, and I can share my rotation growth and value charts with you guys and show you that. But it's interesting, really the point I think I made on Sunday was, did you notice that the S&P declined 0.66% while the index gained 0.67% on a weekly basis, right? We tend to look in these daily and the smaller time frames, and then we forget to step back out and look at the big picture. And I like to look collectively at the entire week's move, in addition to what the price action happens intraday as well. But I thought that was very interesting because so 3 weeks in a row the NASDAQ going up, but we had a stumble last week with the S&P, and then all of that came with the value trade.
Yeah. Are you prepped to show that growth value? Do you have that loaded? If I throw you?
Yeah, I got it right here.
All right, here let's start.
I think pop that up. And
I think
talk to it just as well as I can.
Yeah, go ahead. I think that's super. I think that's key. So you're screen sharing now. Let's pop you in, and there we go. Let me just go full screen.
Yeah.
Here.
So this is my overview of growth and value, and I keep it on here on a weekly chart. I plot the IVE and the IVW. These are the basically the total value trade and the total growth trade. This is a daily rotation, so it's a more short term time frame, and then here is collectively the different capitalization groups, right? So large cap growth, medium cap, and small cap growth. Everything right now is green on this week's trade. Pre-market looks like pre-market futures are lower, but this data doesn't include any of that. This is just Monday and Tuesday's data that we're looking at over here. And just for the past 2 days, here's the growth trade. If you can see that, 1.44% to the upside for growth and 0.76 for value. So that's a 2-to-1 ratio there, right?
Yep.
And then, I mean, and then in the daily rotation here, there's 23, 24 bars. So that's, about 4 weeks or so of rotation. And you can see how growth started to recapture itself on the daily back here early January, right? So we've really been riding it here for the last week or so, last couple of weeks, back to the upside in the short term. And then now we're getting this on the weekly time frame. We're also getting this larger elliptical move, right? So these orbits, I call them orbits, right? It's sector rotation, or in this case, it's value growth ETF rotation.
So
But those
what
orbits are starting to change, right?
what
So
what I notice is on the weekly, and this is what you and I are working pretty hard at. That weekly IVW is starting to do just a little bit to the left, starting to lose just a touch. Where the last couple days on the daily RG is continuing to go. So you have to think it's continuing to rotate up and to the right. So you have to
yeah,
think that the weekly will catch up and that orbital will
I do.
continue.
Since it's early in the week, I don't read a lot early in the week on the last tail as much as just tick it back to Friday's close, because we only had a couple of days and we need 5 days for this whole thing to really
I
look. So I
got you.
don't read a lot in that last tail
But that
there on
daily
the
though,
weekly.
but the point I'm trying to make is look at the last 4 or 5 days on that daily.
Yes,
That's
I
the move
agree.
you're looking for.
Yes, I agree. That's what I say. I really believe we're going to continue to see that weekly acceleration continue to gain momentum and possibly turn around and start making relative strength moves as well, because that's what the daily is telling us, and it looks like it's got more room to go in the full orbital. So that's
And then
that's my point there.
and can you break down while I have you here? I'm putting you right in the hot seat here. Can you break it down between mid, small, and large? Let's see
Yeah,
who's on daily, weekly. Sorry, mid, small, and large cap growth.
on the weekly. All right, let's turn all this off and start over. So we want large cap value,
No, large. Let's
mid
just do
cap
growth. No. Let's just do
growth.
all
You want growth
growth.
only.
Yep. Yep.
Okay, let's go
Right
here. So
there.
this is small cap growth, mid cap growth,
And large cap.
and
Oh, go up one. Go up
large
one.
cap growth right there.
Oh yeah, there you go. Yep.
And they're a little funky looking,
Yeah, they look
I
weird. What
will
is
say,
that?
but look at the acceleration here, right? I mean, just look at that vertical acceleration here in large cap growth, right? Over whatever that's been, three
That
or four
doesn't
weeks there, right?
that doesn't look
So
right.
there is definitely a shift in play. Money is flowing back into these markets that have been out of favor for more than a year now. Is what I'm believing I'm seeing here.
Okay. All right. Good. Thanks for that. So let's head into the indexes here. Sorry for that little audible. But that's I was on CNBC yesterday for Tech Check with Carl Quintanilla and Deirdre Bose. It was fun, and we're talking about the rotation into communications. They brought me on to talk about Google. There's a lot going on. Google coming back. Microsoft reported earnings last night. This whole chat GBT or GPT or whatever the heck it is. I just read something this morning that Amazon told their workers to not use it in company networks. And there was a pretty good rotation. There was a pretty big move out of Google into Microsoft in the first week. And then that has actually unwound very quickly. Google's got some antitrust issues, but the entire communications sector is rotating, and I want to show you that as value is coming out, and most notable is energy is coming out. We've had a very big move in technology, semis. We put some new semis to work, so there's a lot of interesting dynamics at work here. So let's start you off at the top here. We are working a very, very simple S&P red count We're looking at let me just get rid of this here, those alternates, visibility less than a day, visibility, that should be already done. A very simple, this is one of two counts that we're looking at in the S&P. For now, I have to say this as the slight edge, which is a simple 5, 3, 5 correction. This coming off of the October lows into this December double top is wave 1, pull back in wave 2, and potentially a wave 3 to go. And I know this is very much non-consensus. A lot of people are calling for new lows, and it very well may be the case. But the evidence, before me says this counts better as a 3. You could scratch out a 5. This is a 3-wave decline. The market tried to sell off again from 2022 downtrend resistance. 1, 2, 3, 4, 5, 6. This is the most visible, elementary, most basic technical trend line I think I've ever seen. It's crazy. My 8-year-olds could draw this. And you have the 200-day, I'm not even showing it, the 200 days just around here. You have the 50-week up here. There is so much technical resistance up here that is drawing every wannabe technician out of the woodwork to play in this sandbox here. So, we told our members back here, guys, it's the same situation with all those daily, weekly moving averages, downtrend line. I think this is the 50% price retracement of the 2022 decline. It's going to be, sorry, this is a professional term, an SH hockey stick, number sign T show, and that's been exactly what it's been, and that was my professional technical opinion.
Color commentary.
Yeah, exactly. Hey, this is YouTube. This isn't national TV. We run the show here, T Long, right?
Off-color commentary. Let's put it that way.
Hey, you know what, though? Even some of the guys who I do CNBC with, man, on their own shows, they're swearing. I don't know. Should we swear? Probably not. Actually, I've gotten some messages from some of our subscribers say, this is not professional. I do not expect this from you guys. So I was like, okay, fine. But anyways, there is so much going on here at this zone. So again, that's 50% price retracement. So let me get off of the daily, get down into the, let's get down to a 60-minute coming off of the October 16th low. So here's what I'm looking at, an October 16th low, and there's a lot going on here. Alex helped me with this count. Alex came up with the ABC expanded flat down. Look, if you wanted to push back on me a little bit and say, the heart of this thing is a 3-wave move. Boom. Oh, come on. Boom and boom. If you wanted to push back on me, I couldn't disagree with you. However, okay, if that's a 3-wave move, then you need something that resembles 5-wave moves to the downside. Is this a 5-wave move? I don't think so. Down a full 100% price retracement, down a little 4 compared to a massive 2. And then you have a serious price retracement off of your wannabe 5-wave move. We've already retraced 786 at 40.26, and this is the line in the sand. If we can get a sustained move above 40.26, I think you can pretty much kill that interpretation, right? So if you want it to be a 3, fine. You better start seeing some impulsive 5-wave move to the downside, all right? So I'll show you the alternate count, but let's just focus in on here, red, for now. We're looking at diagonal 1 down into 3, 4, 5. Now this is a diagonal. It's a 3-wave diagonal, okay? And before anyone who pretends to want to know Elliott wave say, you can't have 3-wave moves in diagonals, my beloved modern day ambassador, Bob Prechter, told us we can't really have 3-wave moves in leading diagonals. It's not really what R and Elliott said. Not the original Elliott wave grandfathers said. I kind of disagree with that, because if you think about it, the very function and purpose of a wave 1 is supposed to be very early going. So it's just getting off the mat. It's a beaten down market, fundamentally bear situation, sentiment's bearish. It's just getting going. I don't care what the internals of a wave 1 are. If you can scratch out a 5-wave move, fine with me. A 3rd wave is much different. 3rd wave, you want to see a good, clear, motive, impulsive wave. All right. So okay, so we have, let's call it a 5-wave off the off the low here, and then we're going down again. You know, we need to see continued motive impulsive activity in that third wave, as I just mentioned. And that rotation, as Terry mentioned in the beginning, is starting to suggest that might happen. So, you know, I am looking at a possible A alternative, you know, up in B, maybe down in C. The market have to get crushed here, but it's not looking likely. Again, Terry said it earlier. Keep the bigger picture in mind. We have a highly visible 7-point downtrend, 7 touch point downtrend line with a bunch of moving averages. I don't even need to show you. They're all in here. The market really wants it. All right, so let's get off of that. Go to the NASDAQ quick. Actually, you know what? Sorry, let me show you the alternative first. Here's the blue alternative. You know, I've been watching this. I've done a lot of public videos on this, calling this the triple Lindy correction from Rodney Dangerfield's Back to School. W, X, Y, X, A, B, C. Down to, that's your path down to 3,200. Tell you what, same level, 4026, better not break. Because if it does, we're probably going up above the B wave high. Now, what does that mean? To keep a bearish count alive, I'll tell you what I'm going to do with our members. If we break 4026, what I'm going to do is triangle this. A, B, C, D, E. That would tell you that we have, for the first half of 2023, an X-wave triangle. W, X, Y, A of X, B of X, C of X, D of X, E of X, and then you drop. Okay? So there's nothing here for me that's immediately bearish. There's nothing. Okay? And I know a lot of people are caught off sides here. NASDAQ, here is the bullish red. Same thing, A, B, C, diagonal 1, ABC down, and then all of a sudden we're getting this pretty big move into growth here as we're heading right now into earnings season. There's your 3-wave move down in 2, and then we have evidence of motive impulsive. Alex, you want to talk to this? Because you did this intraday NASDAQ for me.
Yeah, I mean, this actually portrays a relatively, I would say, more bullish advance. So if you look these first subdivisions after the first big corrections, we have to call this 1-2 in a blue wave. So because there is an overlap, so in that respect, as you can see by the nature of this trend line, we're holding a little bit, but I think we are in a 1-2 situation where we're going to see a little bit more explosive advance on the upside. So yeah, that trend line is a key, but this is the scenario which will prepare you for the pretty bullish advance in the next couple of weeks.
Yep, I think so. I think so. Yeah, and I'm going to go back over onto that into that growth rotation as well. So that's the NASDAQ. Let's take a look at Apple. Apple is, again, we've been saying this. Trading Analysis has been saying this forever. As bearish as people want to be in this market, that's not a 5. An Apple. That's not a 5. I mean, that is such a simple ABC X ABC in Apple. And I always make the joke, you know, let's just keep that big picture in mind. Does that look like the end of the world right there? No, it doesn't. And I get it. I understand. We've got we got inflation, 40-plus year highs. We have the Fed who's trying to pound us over the head with 5, 5.25, 5.5 Fed funds rates. But the futures market is calling their bluff on that one. So, you know, if you get into Apple, you know, that's the weekly. Let's get down to the daily. Is that the bell? Yep, we're open.
Yeah.
We have, you know, I would say a threat of this 2022. Actually, this even goes back to, August of 22. Downtrend right there is being threatened. This is a level that should have held. This old uptrend This sort of support right here was broken, should have offered resistance, did initially, came back. Now we're going up to test this. There's a lot of evidence to say that we're going to continue higher. Yields are sort of hanging in around the 3.4, and this is going to be the key. We could have Alex talk about this. I'm going to bring Terry in here right now. We are looking at a potential further decline here in the 10-year yield from 3.4 down to 3, the figure 3.00. What impact to what market and what message that tells the market, we shall see. Does the market take it as a sign of risk aversion and buying of long-dated treasuries for protection, or are we seeing a uninverting of the yield curve, somewhat of a flattening more of the yield curve as longer-term yields are coming down, right? Actually, it's going to go the other way. I mixed up. We need to see rates that go up to see uninverting of the yield curve. What message does that tell the market? If we get a further I can't even talk this morning, inversion of the yield curve, does that hurt the stock market? Or is that more stable long-term inflation expectations and buying of still somewhat reasonably priced longer-term treasuries? You just got to see what impact that has on the stock market. That's what I'm watching. Watching gold, trying to break out. I know a lot of people are bullish on gold. It's doing all right. We talk about real yields. So we'll see. So just kind of my overall take. Looks like markets are down here a little bit on the open. Tech is leading us down 2%. That's a pretty good clip. Pretty big clip. So Terry, you ready to jump in?
Yeah, sure. Go ahead.
All right. You are now up.
All right. So we already got about half of what I was going to talk about out of the way with this growth and value rotation here. And also the thing I pointed out about the dramatic difference in the way the S&P performed last week versus the NDX, and then to Todd's point, the red line here is a 200-day simple moving average. S&P is rallied back above that. It's pulled back somewhat this morning, but I think now you're going to see this confluence of support that not only in the fib levels that Todd has mentioned there, but also in these traditional 50-day and 200-day moving average. Now, the NDX is yet to recapture that 200-day moving average, but it is back above the 50, so that's a very positive thing. Now, we've got pre-market action. Market's been open like 4 minutes now. Communication sector for the week. This is a weekly summary, right? Not just a daily. For the week, so 2 days and 5 minutes into the market, communication sector is leading right now. Financials is close behind that, industrials, and then staples. But to the downside for the week, it's materials, healthcare, energy, and utilities sectors. That's that value trade coming off there. Here's the weekly. Here's the the sector leader scoreboard. Let me get that again with all our recent leadership in energy, industrials, materials, financials. Look at the vectors now. Healthcare, staples. These vectors are moving to the southwest, meaning that we're losing relative strength and relative momentum versus the benchmark S&P. I'm about to sneeze, so excuse me, guys. You just can't stop it when it's about to come. So,
for sure.
And then here's that vector on the communication, that rising blue rapid trend vector coming up. Communication sector was a dog since September 2021. It's not been performing, but most recently it has been recapturing some dramatic moves here in terms of relative strength and momentum, and has pushed itself back up here in the improving quadrant. Technology sector overall is still kind of just hanging out down here, right? We haven't really seen the explosion in technology, though we are starting to see growth, and some of that growth does include this momentum coming back up here in consumer discretionary. Now, I talked a little bit with the clients on Sunday about transport sector, and I know, Todd, last week you saw something that piqued your interest there in transports. Transports is a subgroup ETF. The XTN is a subgroup here of the XLI. Right now, we have been seeing the industrial momentum has fallen back to neutral, but it still holds a high relative strength, so we don't necessarily count it out. But we did notice that there was some interesting things happen. This week, though, I think there's been several earnings announcements come out. I think I saw Boeing had a miss this morning. But one stock that I did see in that industrials category was General Dynamics. I'm not showing it here on my screen, but I just wanted to mention I did see General Dynamics make a pretty good push higher. Inside the XTN, there's about 7 different industry subgroups. Okay, there's trucking, air freight couriers, marine shipping, rental or leasing, airlines, and other transportation. Think Uber and Lyft, and then railroads. Right. So really, railroads are at the bottom of the list. They're taking the biggest hit. They're down about 4% this week. Other transportation is down about 3%. Airlines are down. Right. So we have that whole group. What brought it to our attention, we're seeing that play back out, and this again goes back to this longer, same kind of discussion that Todd had with Apple here in the XTN. Saw it break back above this longer dated downtrend, and that gave us, you know, it brought interest to what's happening here, because we're certainly, if we stayed inside this downtrend channel, we just keep going lower. But once we break above the 200-day moving average, which we've done here, and then we get back out above that, that starts making things interesting. So while we're in a consolidation and a pullback right now, in the near term, I think you're seeing that choppy sideways behavior here in the XTN. It's possible the XTN works its way back down, finds support at the confluence again of the 200, the 50, this downtrend, and that may be some buying opportunities to reestablish some industrial positions, most notably back inside those transports. Now, this is a plot of those industry groups. Just like we can do stocks and vectors, we can also look at those industry groups that are related to that. For the XTN, I have all of them plotted here, and then I have here is the XLI, so you kind of get your bearings on that. Who's been outperforming though? The transportation services index stocks within that group have the highest momentum, and they are at the highest relative strength, and they are outperforming even the XLI. So while the XLI overall is fading, we're still seeing some of these industry groups outperforming. Others, I will say, there's been some recent return hooks and reversals. So in the short term, I think I would probably just put things on my watch list. I wouldn't just jump all in right now. But there will be an opportunity possibly for industrials to pick back up again. So just wanted to share with you, if we look at the entire XLI, this brings in all of these different industry subgroups. So we only have a nice little subset. You can see here's the XLI. So there are many other industrial industry groups that have been outperforming, and that's why there's some that are underperforming and some that are outperforming. When I flip back to those in the transports, if you notice, I only showed you the one out here that was outperforming, right? But there are others in the industry group that are outperforming, and that's what's been holding the XLI up. So, and last thing here, let's see here. I think I was going to show the XLI itself. Let's pull that up. You can see, looks like mostly negative price action there. There is some positive. Here's Raytheon. Yeah. I think Raytheon is doing well, up 5.5% this week. Cummins up 4%. TransDigm, yeah, Cummins I think made a pretty good move last night. So the XLI though, Todd, it just looks sideways choppy. I've got it running. Does. I don't know if this is a valid wave count. I don't know if it matches what Alex has got, but I think maybe we're still in the flat. We just need to find that support level out here. So anything else from you, boss? And
no, that's good work. That's good. We got to dive into those industrials. It just goes to the heart of what we're talking about at the top with this rotation out of value and into growth. And it's a very nuanced story. So we got to spend some time and go through all these different industries with industrials, with energy, with healthcare, staples, utilities, and even some real estate. We got to look at
Yeah.
that. So
Yeah. Raytheon got a pretty good kick yesterday, but then just pulled back somewhat
yeah,
today. So it's
whole
pretty nice
market's.
little candle on Raytheon.
It looks like the market's guide, or it's hanging on to Microsoft's guidance. Everything's off here this morning. Nasdaq's down 1.8, S&P down 1.1, small caps down 1. Rates are down, so it looks like market's trying to take another breather here. As I said, it's going to be. I said it was going to be bloody up around this 4,000, 4,100 in the S&P, but all right, enough with this. Let's get some clarity.
All right.
Alex, you ready?
Yeah, sure.
All right, man. Show us what you got.
Can you just give me a okay for sharing?
I already did. Oh, there we go. Try it now. Yeah, while Alex is loading this up, the other thing I'll mention is we did on our swing trading portfolio, we run two trade desks at Trade Analysis. We have the options desk and we have the stock desk, and we did add we have one semi name. We've been holding AMD, and we actually added recently another one, a value chip name, Skyworks. I'll talk about that one here a little bit. Okay, Alex, you
And we have STM.
and STM. Thank you very much. You're right, 3. Let's see, Alex, you're up. Go ahead, man.
Okay, so let's just go and see a little bit of what's going on in the macros. I rarely see this 97.2% for the Fed meeting on 1st of February, 25 basis points. That's kind of a one-way street, if you agree. So 25 basis points we have for February. Market is still kind of calling this very strong hawkish narrative with the latest CPI that we're going to plateau in rates. So I do not expect pivot.
Alex, try to pull your microphone up, man. It's too muffled.
Sorry. I don't expect completely to see a pivot, but
Yeah.
in that respect, I think that we're gonna actually stop raising rate. We might go one more move in let's say in March, but that's also questionable. That depends how the CPI will go. So Fed target rate 4.75 to 5%. On all durations, I think we are very close. 2-year, 5-year, and 10-year are very close to this target rate. So probably it's gonna be it where we're gonna plateau. And actually, I think if we stay with this range of data, we're gonna stay the most of 2023 without moving in rates on the upside. And maybe if the inflation go further lower, we're gonna start maybe cutting in 2024, but not much. That's my current outlook. So on US 10-year yields, we are looking for a potential small pullback, then maybe just one small hiccup on the upside, and then a full-fledged reversal for 2023, 24, and 25, where I think the most of the risk assets will go further on the upside. So that's why overall, on a cycle basis, we are staying long, looking all of this macro picture. So dollar index, it's coming closer to some probable completion of this fifth wave. So pretty big move down from 115 almost. We are trading at 101, so almost 14-15% down in dollar index in a pretty small amount of time, which is kind of this backs this thesis that we had, where the other central banks are gonna start pushing, and because the Fed was first. So that's kind of a normal. So I do expect to see just a small pullback pretty much soon from the dollar. So commodities still in some type of a sideways, so I don't expect much there. I'm still in this Thomson Reuters commodity index in a B wave, so I expect lower things to see, which kind of also goes in line with our pause in rates. So commodities should be down for a year or two further, or just in some type of a sideways, before potentially we get a new inflationary move on the upside some around in a year and a half too. So oil not doing much. We are up against these trend line resistance levels. I think we're gonna continue a little bit more on the downside. My support levels are at 65.34. This is the Brent crude oil. So I'm just going to show you a couple of things that I'm looking in a sector. So you talked on the CNBC on the communication sector. So I have a couple of this sector has been beaten down pretty heavily. So we are looking for a potential reversal. Of course, we need a 5-wave move. So this sector is on my watch. If we see a full-fledged 5-wave move on the upside, then from the Elliott wave perspective, after this corrective pullback, we know what that means, that we are trading now around equality. So if we start after a small pullback to continue higher, this means that for a longer term, at least we're going to get an ABC on the upside, which will be pretty bullish on communication for the next couple of months, and even a year or two if you look the whole wave structure. So I'm looking a couple of stocks there on the XLC. So Meta is starting to look good after this gigantic pullback. So we have some of the things here. We are trading above this trend line now, this huge from this wave 2 pullback. So if we also develop some type of a 5-wave move, this means that at least temporary or on a longer term basis, Meta will be something which we will need to look for a higher recovery here. So it's going up pretty nicely from the lows. It's still in the beginning stages of this potential 5-wave move, but anyhow, passing equality with a small pullback, we're definitely going to jump to capture this wave 5 on the upside. So we have a little bit more, I think, on a directional upside before we have a nice pullback. And this will mean a lot because after such a huge drop, after an ABC, we're going to continue upside as well, which means that communication sector will still be one of the things which will be recovering. So Comcast is also something that I'm looking. So we have potentially first 5 waves up on Comcast. So very nice move from lows. So after a small B pullback, this will be on our watch list for at least another move higher in a C wave. I'm also watching Google. Google is kind of still sideways, but there is a chance on our bullish outlook that Google might recover a little bit more on the upside. So I'm watching very carefully what's going on Google. If we get something more also above this equality, I think that we will be witnessing a full-fledged recovery. One more stock for you.
Wait,
yeah.
go back, stretch that, put that Google back to normal,
Sure.
on the 60-minute. I want to see the inside of that. Yeah, don't squish it up so much. Is there any way? It looks like you're gonna have to make that blue. So we're pulling back in blue 4 now, likely.
Yeah.
You know, can you make? Yeah.
No, so this is one. Okay, so if you want to make this, I see what you think.
No. Leave your one where it is.
Okay.
And then put blue 3 where your highlighted orange is.
Here.
Can you make 5? Can you make 5 out of that?
Yes, you can. With a small push here, there is a third wave gap here,
Yeah.
so it might correspond. But anyhow, I mean, on a longer term basis, this is a very short 1 hour time frame. So if this recovery continues above this equality,
But this
I
is
think
where
that,
we look for entry zone. No, don't make it a daily chart. Stay in the 60-minute. Like,
Yeah, sure,
you know, because
sure.
the depth of 4 is now so long. I don't think it squares up against that little black 2. It'd have to go against parenthesis 2.
Yeah.
Right?
Yeah, so this is a blue. If this is a blue wave 4, we're gonna stop some around there and then actually make a recovery.
Yeah. Okay.
So one of the stocks also I'm looking, which is recovering very nicely, it's Netflix. So Netflix has been moving from its lows also, and we have this on a 195-minute very nice recovery in Netflix. So we count this from this large move on the downside in a 1-2, and then we have a leading diagonal in 1 down in 2. So we are itching pretty nicely on the upside. So this is also one of the stocks that are potentially announcing this longer term recovery in this communication sector. So this is still now in a watch term. So probably we're going to select a couple of trades there when a time is due. But I think it's good to watch the communication sector because
Nice.
we see some signs that potentially we might see a further recovery for the longer term, not just for the shorter term basis. I already showed you this OMC, which is something which I'm very looking for a small pullback, which might occur soon. One of the things I want to show you as well, it's a Bitcoin chart. So Bitcoin has been a kind of a lagging indicator. So we are still recovering very nicely. So 1-2, I do expect just a small 4-wave pullback, and then we're going to have a full 5-wave move recovery from lows, which can announce a little bit more in advance that after a pullback we might continue further on the upside. So there is a positive signs all around. I think we might spend with a little bit not big but small troubles ahead. But since if we look the Fed, if we look the dollar, Bitcoin, and a couple of other stuff that we are looking, it kind of announces kind of a February, March that we can expect a more sustainable and bigger rally to come.
Nice. Yeah, a couple things, couple points on that. I mean, we still have, as you said, Bitcoin is acting as a good leading indicator to where stocks are going. It's a risk asset, right? So this is going to be, what's this right here? That's semis in red. Purple is the NASDAQ and green is Bitcoin. So you might even say that, it looks like semis are kind of off on their own.
Yeah.
But you look at the correlation here of the NASDAQ and crypto. I mean, it's undeniable just in terms of a risk asset. I mean, we got a little bit of an inverse move here, but they just fell right back in line. And then, one other thing I wanted to look at was, Terry, I think those indexes or those Dow Jones indices were giving, I think, some weird quotes on the value growth. I think your weeklies were heading straight up. I don't know if we need to refresh that.
Yeah, maybe there was something wrong with my my data feed.
No problem. I just wanted to follow up on that. So let me get out of value right here. So we have value out. Let's do small growth, mid value out, mid. Okay, so we have large cap growth, mid cap growth, small cap growth. This is the weekly.
Yeah, yours look a lot better.
Okay, yeah. So what's happening here on the rotation benchmark to the S&P? Mid cap continues to be relatively stronger, but the fact that it's furthest to the right on the x-axis gives it more relative strength. Hasn't quite had the same move up back towards a leadership position that small cap, this is small cap growth, and this is top 200, large cap growth. But they're both making the move up, catching up to where mid cap is. So that's the weekly. And then let's do the same thing on the daily. So it's going to be, they should be in the same order right there, IWO and IWP. So what's happening here in the daily? You look at what's happened here. We have ever since the first of the year. This is the turn of 2023. Look at the move these guys have made from the lagging, improving up to the leading. Small cap, large cap, and mid cap growth. Now let's put value on top of that. Let's do the same thing. So we're going to do small cap value, mid cap value, large cap value. Did I get them all? Small cap, mid cap, and large cap. So let me do the same thing over here. It's going to get a little messy, but it will show this point that we're making. Okay, so what's happened over here on the weekly? Well, large cap value on the week over week ever since January 6th has just head straight down. Mid cap value, same thing since from the 13th, straight down. And then where's my small cap value? Small cap value is here in blue. I mean, it's heading right to the lagging quadrant. So you have small, medium, large cap growth coming in, small, medium, large cap value coming out on the weekly. And then I think it's being corroborated here on the daily. So here's large cap value, mid cap value, small cap value, all heading lower. So today's price action's interesting, and I was just doing a Microsoft chart, just listening to Alex at the same time. You know, they didn't like the guidance here, but I just wanted to update this wave count quick, and then we got to head over to the members webinar. So here's what we're looking at in Microsoft. Could it be a flat here in wave 2? So we have a 618 and 50% retracement of wave 1, ABC down. I can do an A versus C and a C versus B to sort of build a fib support zone of where Microsoft might be interesting. So we have C versus A right there. I'm going to pin that. I'm going to do another Alt C. 1272 is right there. Edit undo is a beautiful thing. So you have a pretty good zone right in here. Watch this. Here's your actionable takeaway. Where's my rounded box? Right there. There's your intended support zone if Microsoft is gonna stay alive here. So leave it there, guys. Sorry for the late start. Again, I won't update streaming software the morning of a live stream. Hope that helps, guys. Alex Terry, great job. Check us out at Trading Analysis. A lot of stuff happening behind the scenes. All is well. Keep fighting the good fight. Market is searching for an identity here, man. It's been interesting ever since December. So trade with a plan. Plan your trade. Trade your plan. Contain the risk. Don't have too strong of opinions here because the market tends to make fools out of all of us. Just stay humble, right, boys?
Yeah.
Yeah.
I did figure out what was wrong. I had the benchmark wrong on those.
Oh, is that what it was?
So
Okay.
I was playing around with that the other day, and I never reset it back. So yeah, once I switched the benchmark back, it looked like yours. So
Perfect.
all right, guys.
Good stuff.
Thumbs up. See you
Thanks
guys next week.
Thanks for joining us. See you guys. Good job.